Eric Muathe, Muathe.com. Now let's take a look at this method of deciding where to go short a stock that has failed to break out. For example, take a look at this one, HL. Recently was trying to break out on the monthly chart above the recent or the previous monthly closing high. You can see there was a failed breakout here, did not close above the previous monthly high, and as of this month we went higher, but we have now turned around and are facing down. In other words, that looks like a failed breakout. So how do you short a failed breakout? Now keep in mind, this is based off this method that I discussed in this webinar, so you can check this out on my YouTube videos. So just search for that, or I should actually have it in the description, where we talk about how you can take advantage of stocks that have lost their momentum, especially when they show evidence of two things. Number one is a failed breakout, and number two, for your timing, you want to use the recent monthly closing high, monthly closing low, excuse me, if you are using a monthly chart. So you can see right now it is moving below the recent monthly closing low. That level so happens to be at 5.58. all right, so as long as it is below 5.58, which is the recent monthly closing low, then it has done two things: failed to break out, and now is moving below the recent monthly closing low. So you can stay short or sell it as long as it is below this recent monthly closing low. That's the monthly. Take a look at the weekly, and on the weekly we can see this failed breakout attempt. And once it failed to break out there, the idea there is that it has run out of momentum, and since then you can see it's down. So the breakout level there that it was trying to move above was at 6.98. So it traded above that for the week but failed to close above that. Since then it's turned around. So really what you can do is set an alert should it break below the recent weekly closing low. If it breaks below the recent weekly closing low, and that is at 5.24, that would suggest that it is now doing the next minimum requirement for a sell signal. In other words, think of it this way: stock's been trading in this range. It tried to move above that range and failed. Now, should it break below this box, that might be a good sign that odds are very high. It might be looking to drop. So you set an alert at the lowest weekly closing low. For here, or for this example, it is 5.24. Anything below that and the stock would be showing signs of breaking down even further. As an example, take a look at this example for DZZ. It tried to break out here and failed. So this was at the tail end of 2015. Once it failed, anybody who used this recent weekly closing low as a sell signal would have pretty much gone short the stock in January of this year. And of course, if that was what you did, on hindsight, we can see you would have had a chance of owning part of this move to the downside. So number one is a failed breakout, and then number two is movement below the recent weekly closing low. Now you can also use this on a monthly chart as an example. Here we can see the same type of situation. On the monthly, after spending 2 months above the previous monthly closing high, the breakout fails there. Once the breakout fails, any movement below the recent monthly closing low would suggest that now it is breaking down even further, and so one would have gone short somewhere here and at least would have been able to enjoy part of this move to the downside. So again, for more information about this, just check here on my YouTube channel. I discussed this in detail, and again, be on the lookout for this. It should be under the description. Two things you can look for when looking for ideas to short once they fail to break out is a failed breakout and movement to fresh weekly or monthly lows. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Woo!